It is really nice to be here with Michael Schlein, President and CEO of Accion International. I know some of you from teaching yesterday and over the last couple years at the business school. I am one of the founders and managing partners of a fund called ResilienceVC that is trying to make financial services a force for good for low to moderate income Americans. We're a fund based in DC. I'm also an adjunct professor here. I teach the course with Bruce Usher on investing in social ventures. So those of you that are students, if I don't know you already, I hope to meet you in the next year or two. It's an honor to be here with Michael. Michael is, as I said, the CEO of Accion since 2009. Before he led Accion, he had a storied career across finance and government. He was, I can do all of this without the bio page. He was a senior leader at Citibank. He was senior at the SEC, chief of staff at the SEC, the head of the SEC, worked at two mayoral administrations. What didn't make it into his official bio, which is probably just a typo, is that Michael and I worked together for 8 years at Accion, where I led for some time the early stage venture program that Michael will tell us more about. So Michael and I have known each other for a long time. And in fact, the first time I met Michael, which was about 10 and a half years ago, was at a Columbia Business School event where I moderated a fireside chat between he and I 3 months before I joined Accion. So Michael's been a dear friend, mentor, boss for now 10 years.
It was a really good conversation, and that's how we got the job.
yeah, exactly. It was actually it was an interview. It was a very
public interview.
Very public interview. So it's an honor to be here with Michael. I want to start with a question, and Michael has a couple slides to share, but before we even get to those slides, I want to start with a question that will sort of underlie this whole discussion, which is, what is the financial inclusion challenge facing the world, and why does it matter? Why does it matter? I think a lot of us have this, at a business school, this sense that finance matters, that getting access to financial services matters. But for the billions of people around the world and in the US that are underserved or unserved, why does that matter? How does that affect their lives?
So it is my honor. I'm very, very pleased to be here and be here with all of you, and also see these new facilities. They're wonderful. That is at the core. Why does financial inclusion matter? Why bringing financial services to people who have been left out? Why should you care? We are here at the business school. We're here in New York City. Every one of us, we take for granted. We have credit cards, we have debit cards, we have ATMs on every corner. You can get insurance for your home and for your health. You can get loans to go to school. You can get loans to buy a home. You can maybe even get loans to help build a business. And even the simple things like fast, easy payments, but also your bills generally come in monthly, and your income comes in monthly. And that is extraordinarily convenient, and you don't have to think about it. And all of that makes our lives easier. For 2 billion people in the world, they are left out of, poorly served by the global financial system. The global financial system fails them. And their lives are so much harder, and harder than they need to be. So a typical person living in poverty is a farmer, and she, in a rural area in Africa, and she gets paid once, maybe twice a year at the time of the harvest. She has to make that money work all year long, and yet she lacks a safe place to save. Just even think of that phrase, a safe place to save. We take that for granted, and we can take it for granted. I want her to be able to take that for granted too, but she can't because she doesn't have a safe place to save, so she puts it under her mattress. She may have to travel hours to make a single payment to keep the lights on or to keep her kids in school. And those are hours that she's not being paid because when she's not working the farm, she's not being paid. She lives in a place that gets droughts and floods, and she cannot get insurance. And she lives in a cash world, and so all of us, with every transaction, we're building a credit history. She is not. She is not only invisible, but she is doomed to stay invisible. And we have today all the tools we need to change all of that. We can make her life so much easier, and that is our vision. That is what we're truly trying to do. We're trying to create a financially inclusive world where she has all those tools to help improve her life. That is what we're trying to do.
So let's talk about how Axion is meeting that challenge, helping to solve that challenge. What are the tools you use? Where do you use them? How do you use them?
So Axion is a global nonprofit dedicated to creating a financial inclusive world, a fair and inclusive economies where everyone does have those tools. Little history, we started in 1961. We started as a private sector Peace Corps doing community development in Venezuela. And in fact, the founder of Axion went on to run the Peace Corps. And then in the early 70s, we said our clients need more than community development, they need capital. So we started making very small loans to the poor in Brazil in 1972. Dr. Mohammed Yunus was doing it in Bangladesh. Others were doing it in Southeast Asia. And it is the beginning of micro-lending, microcredit, microfinance. And it turned out that people could repay. Very poor people could repay those loans 97% of the time, which at that stage was, people were shocked to realize that. And that's a statistic that has held up over decades. So then Axion built a string of nonprofits in almost every Latin American country to make small loans to the poor. So then Axion helped them grow and train, loan officers and raise philanthropic capital and develop products and services and help them grow until what is really a seminal event in our field. In 1992, before 1992, all of microfinance in the world was done by nonprofits. 1992, Axion created the world's first for-profit bank focused on the poor, Banco Sol in Bolivia. After 1992, the entire world has gravitated to that commercial model that we pioneered. Banco Sol, all of a sudden, back then this was controversial. Today, sitting here at the Columbia Business School, it's obvious. All of a sudden, Banco Sol could access the debt markets, could access the equity markets, could hire talent in a different way. Banco Sol was regulated in a different way. And it had been doing very well as a nonprofit, but it completely took off as a for-profit model. So then we went back and we recreated all those nonprofits throughout the whole region and recreated them as for-profits. So then we became an early equity investor in, and then helped to build some of the great microfinance institutions. Fast forward, much later, we had the world's first IPO for a microfinance bank, which was incredibly controversial and also incredibly successful. Yep. And which then allowed us to expand across a dozen countries in Africa, India, China, the Philippines, Myanmar, Indonesia, and more recently, in the last dozen years, Fintech. And this is where, let's see if I can. Oh, there we go. Okay. Perfect. So, because this may look a little familiar. So this is what we call our venture lab portfolio. These are all seed level investments in fintech companies trying to create a financially inclusive world. This is the part of Axion that Vikas really built. So I'm gonna tell you all about it, but it's really his work that I'm bragging about. These are, in my mind, the most innovative companies in the world, all leveraging brand new technologies. And there's a reason we're very focused on seed, because they're the ones who can embrace the newest technologies. Big companies struggle to be innovative. These companies are born to be innovative. You see all over the world where I tease Vikas and the staff, we used to work really, really hard to find these companies. Now they find us, because we have an incredible track record of, in the world of seed, about 25% of companies that ever get any seed funding ever make it to Series A. 80% of this portfolio is making it to Series A. So I used to joke that, that means we're either really good at finding these companies, really good at supporting these companies once we find them, or living in a fintech bubble. The answer is a little bit of all three.
Right.
But there's something happening now that didn't exist, a dozen years ago. I don't know what'll exist a dozen years from now, but these companies are shockingly innovative. And just to give you a little flavor, at the top of the page, Field Intelligence, one of my favorite companies, is a company that's leveraging artificial intelligence to advise small mom-and-pop pharmacies on what they should put on their shelves. Now think about that, especially during the pandemic. What any pharmacy puts on their shelf is everything. It's like if you don't have the right medicines, people get sick. If you have too much, you end up throwing out expired pharmaceuticals, which means you're throwing out your inventory and you're throwing out your profits. But if you can use AI and predictive analytics to look at trends and say, this is what you should put on your shelf, it means everything. And on average, you can plug into Field and significantly increase your revenues 30, 40%. This is a company that is trying to dramatically simplify the medical supply chain in the continent of Africa. And financial services is embedded within the model to provide the working capital. So that's just like an example of leveraging technology that a small mom and pop store could never do on their own. Just one other example at the bottom of the page, Pula, leveraging global satellite data. I did not know this. You did know this. Others may have known this. In the last few years, global satellite data has gotten extraordinarily high quality and really, really cheap. So Pula is using that data, it's a new source of data, to ensure smallholder farmers. When I talked about 2 billion people being left out of and poorly served by the global financial system, 2/3 of them are smallholder farmers. And they've been really, really hard to reach. But now, using satellite data, we can see when there's a drought, we can see when there's a flood, we can monitor soil conditions, we can provide agronomic advice, we can monitor cloud coverage, and all of a sudden we can ensure smallholder farmers. Not only is that critically important, but also it's growingly important as climate issues become more and more pronounced. I can go through every one of these. You can go through every one of these. They are incredibly innovative companies that some of these are going to fail, and some of these are going to change the world. And we're set up to take risks that others aren't willing to take, to find the ones and help them grow. I'll go through the rest of this pretty quickly. This is the seed portfolio. We also, with our partner, Quona, created a series of funds. These are at the Series A and B funds, same thesis and even a bunch of overlap, Fintech for Inclusion. Between these two portfolios, we now have 7 unicorns. So we're really showing the world that you can have a huge social impact and a great financial return, because that's how we're going to change the world. We're going to attract capital to this sector. In addition to Fintech, we continue to invest in banks and microfinance institutions. So these are really the incumbents, where the first 2 pages are the upstarts. These are the incumbents, but we're helping them leverage all these new technologies to increase their efficiency, increase their products and services to better reach people that are left out. And they all are on some journey to digitally transform. And so we have a team of global advisor, basically consultants, 50 growing to 60 this year, people who are experts in the digital transformation of banks and microfinance institutions to better reach the poor. We also have one of the leading think tanks in our field, the Center for Financial Inclusion, which does a steady stream of research, including on things like the bias inherent in algorithms, which is becoming more and more important, but across a whole range of consumer protection, climate issues, data, women's financial inclusion. And last, just so you have the whole picture, in the US, we're the leading CDFI, Community Development Financial Institution, and over several decades now, 90% of our lending has gone to entrepreneurs who are Black, Latinx, women, and immigrants. The good news is that's who we lend to. The bad news is that's who the banks don't lend to. So we can turn this off or go back, but that gives you the lay of the land. There we go. That is who we are. That is what we're trying to do. Overall, we're trying to harness technology in the capital markets to change the world.
So thank you for that. And it was great to see that map again. So technology and the capital markets to change the world, to end financial exclusion.
Yeah.
But you've been at it for a while. What's the constraints? What is keeping us, despite your efforts and the efforts of other organizations like you, the efforts of these fintech companies, from achieving this goal?
So the constraints are well, first of all, there's several of them. Literally lack of trust from those 2 billion. Bringing them into the digital world is formidable. Also lack of digital literacy, financial literacy, digital infrastructure, physical infrastructure. There's enormous constraints that we have to work our way through, and we are working through. But just going to the lack of trust, think about this for a second. I like to make this analogy. If I told you you were, we're going to pay you, but now I'm going to pay you in Bitcoin, you'd say, okay. And then you'd start to think a little bit about, well, okay, what do I do with it once you pay me in Bitcoin? Where do I swap? Like, how do I buy food? How do I pay my rent with, like that's all confusing. It's the same thing for a person who's living in the cash world, and all of a sudden we're now saying, we're going to pay you digitally. And that's a big, big leap of trust and education. Now, the bad news is we went through a global pandemic. The good news is the global pandemic did more to accelerate digital acceptance than almost anything, because if you had the chance to transact digitally, you took that opportunity because face-to-face was scary.
Yeah.
So we've seen, over the last decade, we've seen enormous digital acceptance. And then in the pandemic, we've seen like another decade of advance. So I do think there are significant obstacles, but I think we're really moving. And you know how this all works. Once you get critical mass, everybody starts transacting digitally. I'll give you one little statistic that kind of stuck with me in the pandemic. In the course of the pandemic, something like 140 countries, which is almost all of them, it's a lot of them, created over 400 cash transfer programs for people who, for the poor who needed cash to survive. And they reached 1.1 billion people. And for the most, it was digital, and digital for the first time.
Right.
So there was an enormous, again, it's the pandemic was awful, but this did really encourage digital acceptance. And those are that digital payments, those are the rails. All the companies that I showed you, they ride on those rails. So I do think we're at an incredible moment, and things are starting to accelerate.
You talked about technology and the capital markets, which might surprise people because Axion is a nonprofit.
Yes.
Well, why are the capital markets so important?
So if I could take all of the philanthropy in the world, and dedicate it to financial inclusion, it would not be enough. Right. It would be insufficient. The only way you can tackle something so big as reaching 2 billion people is to harness the capital markets. And so Axion has always lived, ever since 1992, with the creation of Banco Sol, we've sort of lived right there where we, as a nonprofit, experiment, test, learn, but then when we figure things out, we want to take them to commercial scale. We not only want to show, like we did in microfinance, we want to show in fintech for inclusion that you can have a huge social impact and great returns. Because and they can't just be good returns, they have to be great returns, because that's what the capital markets need to see to drive capital into this sector so that we can change the world. It's really, that's what we're, and I want to just make one more point about our real mission. That is our mission, to harness the capital markets and harness innovation to create a financially inclusive world. But there's a more subtle point to this. Everyone in this room right now has a phone in their pocket. Everyone in this room expects that in the next 3 years, you're going to have a better phone in your pocket. Who knows who's going to make that phone? You know, maybe Apple, it may be Amazon, it may be, you know, who knows? It may be some company that hasn't even been created yet. But you know with certainty that there's going to be a better phone in your future in the next few years. Why? Because there's a huge competitive, innovative industry trying to meet your mobile phone needs. That's actually our real vision. We invest in, we build, we support great companies. Some of them are having great success, but they're going to come and go. What we're really trying to do is show and build an industry that will be innovative and competitive to meet the financial needs of those billions of people. These companies are great companies, but some of them are going to succeed, some of them are going to fail, but we need to show the world that you can innovate and get good returns on capital, going back to the capital markets, by serving the base of the pyramid. That's our real vision.
Yep. By the way, in about 5 minutes, I'm going to open it up for questions. So I've got many more, but I want to give you all a chance to ask Michael some questions. So start thinking of your questions. Maybe one thing related to the pandemic, because we sort of forget in some ways, in a weird way, right? We're all sitting here, nobody's wearing a mask. Things have changed a lot over the last year, 2 years. What has that meant for your work in the US and around the world? And are there any big lessons from the pandemic, from your companies, that you think are going to sort of inform what the next 5, 10 years looks like?
So let me take that a couple of different ways, but first let me take a few steps back to the moment that we're in, and it's very much shaped by the pandemic. In all of our lifetimes, we have seen an incredible reduction in global poverty. We've seen hundreds of millions of people escape poverty over the last several decades until now. Yeah. For the first time in any of our lifetimes, it's going in the wrong direction. Poverty is increasing. That is not the norm for the last several decades, and it started with the pandemic, but now it's exacerbated by climate issues. It's exacerbated by slowing growth in some of the major economic centers of the world. And war. Yeah. And so we're moving in the wrong direction. So on the one hand, the need for what we're doing is more important and more urgent than ever. And then I just talked about all that digital acceptance that's happened over the last decade and really during the pandemic. Our ability to have an impact has never been greater. Right. So the combination of, I do think we are living right now in a once-in-a-lifetime moment where the need for what we're doing has never been greater and our potential impact has never been greater. And so I very much, and my organization is very much, we're all about seizing this moment, because if we do, I think the world can come out of the pandemic and really accelerate the creation of a financially inclusive world. That's what this moment is, and it's very exciting. So that's why I take away from the pandemic.
Silver lining I think there was already an AI panel, and when we walk from here to the subway, I'm going to hear AI 8 times. Yeah. It's all anybody's talking about. So I think we need to touch on what the sort of underlying technologies are that are affecting your portfolio and your pipeline, and specifically, what are the opportunities and risks of AI?
So I always feel the need to and I can't even believe I'm saying this, distinguish traditional AI from generative AI. Because I do think the hype is enormous, and the hype in the moment is really generative AI, which is brand new.
Yep.
But AI has been around now for, I don't know, a dozen years. And almost every company is leveraging data analytics, machine learning, the Internet of Things. It's all, this is the big revolution. It is data and data analytics and our ability to understand things that we've never been, it's the ability to see patterns we never saw them before. I do think the generative AI is exciting because all of a sudden you can have a conversation, right, which is a whole different interface. And I think it's very, very complicated. But here's an example that's incredibly exciting. Go back to our farmer, in rural Africa. She'll be able to chat on her phone. There's actually a company that we're looking at investing in that's already doing this called, Farmer Chat. And literally, like, she, in the middle of anywhere, can have a conversation and get high quality, personally relevant agronomic advice.
Right.
That's incredible. And it's in her language, and
right.
it's like she can ask the follow-up question.
Right.
That would be enormous. And then I was talking about how trust and the lack of trust is one of the big issues. Well, imagine if you can just have, like we have lots of bots in our life now, and some of them are really, really good. Some of them are a pain and you kind of want to talk to a person. But we could take that to much, much greater scale and reach people we've never been able to reach. So I think there's enormous potential, but the real revolution is what I think of now as traditional AI.
Yeah.
Old school AI that we've been doing for a long time.
Being applied to these markets,
Totally.
yeah. Well, one more question, and then I'll hand to the audience. You have a lot of global experience, but you live in New York, and I think you were the CEO of the Economic Development Corporation here in New York.
Yeah. Chairman. Do the real work.
It's a good role. It's a good role. What about the U.S.?
Yeah.
What is the financial inclusion challenge here? Is it different, similar, and how do you compare the solutions?
So it is. There are parts of it that are different. There are parts of it the exact same. I mean, the banking system fails to serve a whole lot of people both here and around the world. So overall, we're talking about how do you make a banking system that works better for everyone. We were talking about it at lunch. Half of Americans, well, more than that, I think you said it's 2/3 now.
Paycheck to
it
paycheck.
Used to be half, lives paycheck to paycheck. They're not saving anything. That's terrible. That's frightening. Imagine just you can get sick. Your car accident. You have no savings to drive. That's like, this is the most affluent country in the world. It's sort of ridiculous. And there is tremendous innovation happening here, but really, I think there's tremendous innovation happening in the rest of the world that we can learn from and bring here. And I think we need to. There is a big difference. So again, we're one of the leading small business lenders in the country. Our clients in Lagos, Nigeria, are often coming in and getting access to financial services for the very first time. Our clients in the United States walk in with bad credit scores and a lot of credit card debt. We, in the US, have to spend 2 to 3 months working with that small business entrepreneur to separate her personal finances from her business finances, to then see if this is a viable business, to then make a loan, and then to make 2 or 3 loans, and then she succeeds and graduates and goes to JP Morgan. So you're all business school students. That means we're spending way more on the front end and losing our best clients on the back end, and that is not a great business model, and that doesn't happen anywhere else in the world. So we need to get smarter at this, and Axion Opportunity Fund, basically the world of CDFI lending in small businesses loses money on every loan they make. AOF is now the most efficient and is the one that's trying to break out of that. I mean, the good news is It's all subsidized by the Community Reinvestment Act because banks are forced to subsidize it. So that's why they can continue to lose money. But we want to break out of that. And we've cut the amount of losses per loan down and down and down and down. We've got to get it to break even and then get to much greater scale. And it's going to come from learning from the rest of the world and leveraging that technology. But it is a different set of challenges here.
Yeah. Questions from the audience? Okay, I see a bunch. So you're both of you, maybe you could, just say your name and the question. Let's try to make the questions really nice and tight and specific so we can get to a bunch of you.
Sorry, I couldn't sit back. Anyway, my name is Esin. I'm a second-year student in the MBA program. So this whole conversation actually reminded me of like a particularly challenging project that I did as a consultant when I was working in Turkey. Our client was this incumbent bank who also had presence in Iraq, and basically like the project was to explore fintech opportunities in Iraq, and we were kind of like stuck by basically two big challenges. One was that, like as you were mentioning, there was no trust in the banking system in general, like not just new propositions, but like there was no, like it was a very cash dependent economy. So it was really hard to figure out like how you would even get the money into the system. And we couldn't really figure it out, to be honest. And then the second one was if we were to, for example, launch like a lending proposition, it was really hard to find like how to fund those loans, because I think particularly in that region where like there's a lot of political instability, with a lot of other issues, like it's really hard to kind of get funding or like investors be interested in that region. So I was wondering like how, like whether you found any solutions to kind of like overcome these challenges. And it was interesting on that map, it was still like there's, I think in that region, particularly in the Middle East, there's still not that many propositions due to like maybe obvious reasons, but I was wondering like if you had any insights.
Well, so our particular footprint, and therefore that map, we grew up in Latin America, we expanded to Africa and Asia, and we have not been in the Middle East, though Israel, for example, is a tech hub and there's incredible innovation happening there. We just haven't been part of it. We're only now dabbling in Eastern Europe, but it just happens to be the way we grew up. But getting trust in the banks is a very interesting challenge, and I think it sort of touches on something that I'm very excited about going forward, and we're leaning into this strategically, which is this whole notion of embedded finance and working with a different set of partners to reach people. So in the past, it's sort of obvious, right? You needed to go to a financial service provider to get financial services. Not the case anymore. It used to be you had to go to a bank or a microfinance institution or a fintech to get financial services. In the last few years, we've discovered that really it's all about data and data analytics in order to know what our clients need in terms of, and it turns out that every company is now a data and data analytics company. So every company has the potential to be a financial service provider. So strategically for Accion, all of a sudden, this really opens up the notion of not just working with banks, not just working with microfinance, not just working with fintechs, but working with logistics companies. The one I described, Field in Kenya and now Nigeria, is a logistics company, and we embedded financial services in there because it provides working capital. What that really means, and this is super exciting for us strategically and gets to your question of how do you establish trust, fundamentally, it can change who we're working with, what we do when we work with them, and who we can reach. Because a fast-moving consumer goods company is already reaching those small mom-and-pop shops in extremely remote locations. If we can use them to get to financial services, that breeds trust. You don't have to get people to think about it in our world. Most people trust Amazon more than they trust, Silicon Valley Bank, for example. So we can leverage those kind of relationships to help solve the problems we're trying to solve and breed trust where it already exists.
More questions? Yep, at the top.
Hi, my name is Rami Saleh. I guess would say new to like the fintech world, but when I think of like microfinance in the past, a lot of it I think of like a gendered approach in giving capital to women and the great development outcomes it can have. So I was just wondering if you could share your perspective, like a more updated perspective. I know pandemic had some setback in terms of metrics, like increasing domestic violence, women exiting the workforce for childcare. Just kind of wanted to hear more about Axion's kind of like approach of taking a gendered lens and any exemplars within your portfolio you think of including women and girls.
Such a great question, and you're absolutely right. Um, in the grand scheme of things, about a decade ago, it was 3 billion people excluded. And in the last decade, we've made a lot of progress, and it's now 2 billion people who are left out of and poorly served. And to make more progress, the next billion is going to be harder than the last billion. And they are smallholder farmers, and they're overwhelmingly women. I do think financial inclusion from the earliest days of microfinance are like 70, 80% of our clients, and this is still true today with all those companies, are women. So but we have to be way, way, way more gender intentional than I think we've been in the past. And I'll give you one example that I think is sort of stunning. And it comes out of our think tank that wrote a whole paper on the bias inherent in algorithms. A lot of those companies on that map are using how you use your phone as a proxy for, are you likely to repay a loan? In this country, we use our phone and you get a bill at the end of the month. In the entire rest of the world, it works the other way around. You pay for your phone, and when you run out of money, the calls just drop. You know, and if you run out of electricity, your phone is dead. So a lot of these algorithms say, well, if you're the type of person that tops up her phone and recharges her phone before she runs out of money or power, you're more likely to repay your loan than the person who perpetually is. That makes a lot of sense. And almost all these algorithms do something like that, except for one thing. It turns out, overwhelmingly, men have their own phone, women have the family phone. Guess what? The family phone runs out of electricity, runs out of money all the time. So we are systematically developing algorithms that discriminate against women. We have to be much, much smarter about this and dig deeper and understand that if we're going to make progress. So it's an enormous issue. And again, I think we're just scratching the surface. And this is where it is AI, and it is data and data analytics, and it is algorithmic lending. And just to tie it back to, you know, discrimination in the traditional banking system in some ways was, you know, you'd get a loan officer who wouldn't lend to a certain type of person. Well, now, if you do this in an algorithmic sense, it's exponential. And so we really have to figure this out. And I'll make one last point, which is it's way beyond financial services and algorithms. Increasingly, our whole lives are, you know, what we know, what we watch, what we eat, but, you know, are driven by algorithms. You know, like if you liked watching this, you'll enjoy watching this. And so I do think as a society, we have to really figure this out.
Yeah, behind two rows up.
Can you say more about the Community Reinvestment Act? And if I heard you correctly, you said that the banks lose money by utilizing it?
So in the US, we have the Community Reinvestment Act, and banks are required to lend into neighborhoods that they otherwise wouldn't. So in other words, they may not be commercially viable, but in order to get a federal banking license and also in order to approve any kind of merger or acquisition, you need to show a history of lending into low and moderate income communities. And some of the banks don't do that directly. What they do is they philanthropically support institutions that frankly do a better job of lending in those communities. So the whole world of CDFIs, Community Development Financial Institutions, actually are relatively new. They were started in the Clinton administration in the 90s. And they were designed to promote lending into, you know, these low and moderate income neighborhoods. They get banks subsidies through below market lending or buying their portfolios or just straight up, you know, philanthropic donations. And that is why the CDFI small business industry can exist even though they lose money on every loan that they make. That is different from everything else that we do in the entire rest of the world. Everything I showed you on those maps, we're an investor in sustainable, scalable, successful, profitable businesses that are serving the poor, except in the US where we're a nonprofit because we need the philanthropic subsidy to make it work. We are trying to break out of that. There is no one who's ever broken out of it, but if anyone can do it, I think it actually is the Axion Opportunity Fund, in part by leveraging everything that we're learning from around the rest of the world. So that's what we're trying to do.
I'll just add, by the way, that there's a lot of innovation happening in the CRA world. And in fact, my for-profit commercial venture fund has CRA bank and capital in it. So there is sort of a movement towards figuring out how to use CRA to do more commercial things as well. Yeah.
Hi, Michael. Thank you for coming to talk to us. I'm just wondering, could you elaborate a little bit on the intersection of financial inclusion and climate change and the impact of climate change?
So I had an incredible conversation that you can actually see online right now, just 2 weeks ago, with Ajay Banga, the new head of the World Bank, and I asked him exactly this. And he's a friend for a long time, and he's truly inspiring, and we're so lucky to have him as the head of the World Bank. He talks about eradicating poverty on a livable planet. So in a single sentence, he's tying financial inclusion and climate. And a lot of people were like, well, are you going to focus on this or are you going to focus on that because you got to make some choices? And he was like, no, you don't. You have to really understand. And he's so compelling. He talks about in this interview that if you're living in Kenya and you've now had the 4th year of a drought and you're struggling on that farm and struggling to make ends meet, the first thing that happens is the daughter gets taken out of school. And so literally, climate issues, as they get worse, we are undermining the progress we've made in educating girls. And he's so, like he also said, I asked him because he's now met with and traveled around and spoken to the leaders of 100 countries. I'm like, so what are you learning from all that? And he said there's a whole gap in the conversation. If you talk to the developed world and you ask about climate change, they largely talk about carbon emissions. If you talk to the developing world, obviously these are generalizations, and you ask about climate change, they're talking about droughts and they're talking about floods, and it's like, yeah, those two things are related, but it's a really different conversation. And I personally think he is uniquely, personally, and also now at the World Bank institutionally, very well positioned to help us bridge this conversation. I do think for too long, financial inclusion has ignored climate issues. I think we need to really, if we're going to have any hope of tackling some of the growing issues. And again, it's the poor that gets hit the hardest. It's that woman on the farm who can't get insurance, who's now living through a drought. That's what we're trying to do. So I share his view that it's all one, but I recommend this interview because it's just inspiring.
Wait till we're done before you watch it.
Yeah.
Who's got a very short question, because I want to ask Michael one more thing before we're done. Go ahead. Yeah, you've had your hand up for a while.
Well, I have a question for them.
Oh, okay. So
if we have time.
Very quick.
Yeah.
Blue cup. For those grassroots approach to educating communities about financial services.
So without going into a whole lot of detail, I used to work at Citigroup, had a bunch of corporate responsibilities. We used to give a lot of money to financial education, financial literacy. Dare I say, I think, tens of millions of dollars were just sort of wasted. I think a lot of what passes for financial education is useless. We at Axion, and I think generally the industry has moved away You get your new phone your new phone from Apple, and it doesn't even come with instructions. Why? Because it's designed with intention, and it's designed in a way that you can figure it out as you go. That's what we need to do in financial education, financial products and services, because that's the way people are working. Classroom learning is just sort of irrelevant, or it's not irrelevant. There's a place for it, but it's just not nearly as impactful as just-in-time learning embedded in. So we talk about designing with intention so that the products and services themselves are safer and more responsible.
Okay, my quick question, which I don't know what your question was going to be, is everybody in this room now wants to work in the world
that
where
actually
fintech.
was my question.
Okay, good. So everybody wants to work.
A little more. Yeah, go ahead.
Where fintech meets inclusion, meets venture, meets impact. What is your advice to them to get going on that journey?
Well, this actually is sort of my question. I get to talk to a lot of MBAs, and I'm curious, how many of you are interested in social entrepreneurship, pursuing something in social entrepreneurship? Okay, this may not be this. Maybe you came to hear this lecture in part because so it's not. But I'd be curious. But I find maybe it's a quarter, maybe it's a third of the graduates from the top business schools in the country are interested in things like social entrepreneurship and impact investing. And I think that is, maybe that's even low now. I don't know, you're a teacher, is that, you think that's the right?
I think it's higher.
You think it's higher?
Yeah.
Can I tell you that is thrilling to me?
Yeah.
We didn't even have language like that. We didn't talk about social entrepreneurship. We didn't talk about impact investing when I was in school, and it is so exciting because an entire generation is saying, I want to do something entrepreneurial. I want to harness the capital markets, but I want to make the world a better place, and it's happening. So I think, first of all, that gives me hope and optimism. Advice, I think, get to the field, solve a problem, and solve a big problem.
There are many.
You taught me. We look at founders, entrepreneurs on the ground, can't do it remotely, that are solving real issues, real problems, and that is core to building a successful business. And also, I would just say, because we're here in the US, it tends to be fintech entrepreneurs in the US tend to, other than you, no, not other, but tend to get pushed by their investors and the market to move to service the affluent market. Right. I would just encourage all of you to look around to the rest of the world, or even look around to half of this country and say, these social ventures and social entrepreneurs, I think, have superpowers in many ways. I would just say, use your superpowers for good. You can really make a huge difference. And I would argue, and I think there's lots of evidence, it's also incredibly profitable. You can have a huge social impact and build a really great business. So that would be my advice.
Thank you, Michael. Thank you all for joining us.
Thank you. As always, a lot of fun.